This week is going to be a little bit of an SHIT show in our markets, and by far the most important week so far of 2024. It could turn out to be a real pivot point for our markets following this very aggressive historic rally that we have seen. There's really three major events this week. I guess four if you consider some of your consumer earnings like a FedEx, they can also be important. But in chronological order, you have, starting on Monday, the GTC conference with Nvidia. It would not surprise me if the last $150 of Nvidia's stock price appreciation since their last earnings has been this buy the rumor, sell the news kind of situation. We'll see if on Monday we do get the sell the news event. Now, coming on Tuesday at about 11 p.m., you're going to get Japan raising rates for the first time in 17 years. That could have a whole host of different complications for our markets in and of themselves with the $4 trillion of Japanese money that's parked in our markets. We'll talk about that here in this video. The third thing, and the most important thing, in my opinion, is Fed Jerome Powell. We are going to get the first summary of economic projections. This is the first meeting from the Fed in 2024 where inflation has started to ramp up again. And I think we could be in for quite a rug pull. I'll break all of these events down, put them into context, and go over everything else, all of your other data that you need to know coming this week. I will also break down my expectations for Tesla stock. As we seen on Friday, the Nasdaq was down about 1% and Tesla was up almost 1%. So Tesla inversed the broader markets. Tesla traded more like the Russell, which was up about 0.4%. Is that going to continue? Could a sell-off in the markets actually be positive for Tesla? Well, I think we have the answers, and I will share that in this video. In the meantime, hit that like button and subscribe to the channel if you are scared, fearful, if you want to get a little bit greedy, if you want to hedge out your portfolio, whatever you are into, whatever your plan is for this week following this information here in this video. Check out that link down below in the description of this video. Come join the trading community with over 200 members and hopefully make some money this week. If there's any week that could be an outsized event, I think it's this week. And that's a great place to be. Check it out, link down below in the description of this video. But let's go ahead and get started with event number one. And that is Nvidia and the GTC conference. Now, I want to point out Cisco. You're like, what the heck does Cisco have to do with frickin' anything Nvidia or anything in our markets? Cisco, who cares? Okay, a lot of people have made the comparison that Nvidia is the Cisco of the 2000s .com bubble. Now, Cisco back in 2000 was expected to do 50 cents, 53 cents or so of EPS. Today, they're expected to do $3 plus of EPS, and the stock is still not back to its highs back in 2000. This run-up that you've seen in 2000 looks a lot like Nvidia's run-up today, and that's what a lot of people reference. Even the same mentality with Cisco at the time exists today with Nvidia. It's a stock you must own. That's what everyone says about Nvidia. And that's true. Nvidia is a fantastic company. But what happened with Cisco is it pulled forward 25 years of earnings into a move that lasted 2 years, essentially. Now, this event coming on Monday, it always will have the potential, big events with Nvidia, to be that buy the rumor, sell the news event. I think the real question is, when you look at Nvidia's chart, how many years of earnings has Nvidia already pulled forward? Unless there is something groundbreaking, huge, very accretive to Nvidia's business for multiple years to come, you probably do get a buy the rumor, sell the news event. In fact, I think from the last earnings where Nvidia was roughly around, 700, even breaking under into the $600 range briefly, to where it is now at $878 or so, $881 or so. I think a lot of this post-earnings move was the buy the rumor of this event. We'll see if we sell the news. If we sell the news, that's not going to be a great sign for Nvidia, maybe for many years to come. Eventually, the markets will roll over on Nvidia, And this could be problematic for the markets because Nvidia has grown from less than 1% of the S&P now to over 5% of the S&P. That becomes a little problematic if Nvidia does start to sell off. And that becomes problematic for your other AI stocks, which coincidentally are your big tech stocks that also control the S&P and the NASDAQ. So besides just the Fed potentially giving us a rug pull this week, you do have this Nvidia conference. And again, the question is, how many years of demand has Nvidia stock already pulled forward or priced in? You can make an argument that you've priced in at least a couple of years. 20 years, probably not, but a couple of years, yeah. And if that's what the logic or narrative becomes in Nvidia, that could become problematic at the very least, to say so. So that's the first event, and I think that could affect your big tech, that can affect your semiconductors, and even what you've seen with Nvidia towards Friday and after hours. The stock did sell off, not to the low of the day, so it definitely could have been a harder sell-off, but you were up like 1.5%, and then the stock really gave it back in the last half an hour of trading or so. So that's not fantastic. This event will be on Monday and on Tuesday, but you'll likely, if you are going to see a sell the rumor or sell the news event, you're probably going to see that on Monday. So that is event number one. Besides that, on Monday, we are going to get a 3-month and a 6-month bond auction. Now, Monday at about 11 p.m., so heading into Tuesday, you're going to get the first rate hike from the Bank of Japan in 17 years. Now, they're expected to take the Fed funds rate from negative 0.1 to 0 to positive 0.1. So it's not that big, but it will affect the Japanese yen, and that could have implications for USD, for our currency, and there's $4 trillion of Japanese money sitting on the sidelines. Bloomberg did a survey in this article here, and it basically 40% of people of the 273 institutional respondents said the first rate hike from Japan will probably not prompt investors to sell foreign assets. So I know it's kind of hard to see, but it's right there. It says only about 40% of 273 respondents said the first interest rate hike by the Bank of Japan since 2007 will prompt the nation's investors to sell foreign assets and reappropriate the proceeds back home. So there's that could happen, right? Even if $4 trillion does not leave U.S. markets, U.S. bond markets, well, some of it's likely to go back to Japan in one capacity or another. Now, why is that a problem? Well, I guess the easiest way to look at this is if you look at TLT. If you see, let's say, selling pressure on TLT and TLT falls, well, that means yields will rise. So you could have some upward pressure on yields coming Tuesday in trading and potentially heading into the Fed on Wednesday. Mix these two events together and you could see a sharp uptick in treasury yields this week, which would obviously be negative for interest rate sensitive stocks and really just the broader markets. And I mean, when you look at TLT, TLT hit a low of $81 back in October, November of 2023. That's after a 10.5% correction in the markets. You've started to curl downwards on TLT. TLT has really started to lose its momentum, hitting higher lows ever since the end of December. And this was the end of really the broad-based rally. If you look at the percent of stocks above their 50-day moving average, you peaked out at about 86% back on December 28th. If you look at TLT, TLT also peaked out on December 27th and December 28th. So it's no surprise. I think TLT is starting, to head downwards. Again, heading into this first rate hike from Japan in 17 years, and also heading into the Fed meeting, which is on Wednesday. Now, the other problem with this is if, let's say, Japanese investors do start to sell bonds. Let's say Powell is pretty hawkish on Wednesday, as I expect, and TLT does make a big move lower. Well, we have quite a few trades on TLT. We should make quite a bit of money in the trading community. Again, if you guys want to check that out, link down below in the description of this video. I think there could be a big trade on TLT specifically this week, just because it's not expected to move a lot. If it does, then you get paid out big. But the banking crisis, okay? When TLT falls, this just means the bond price is falling. Those unrealized losses get larger. Now, that's not to say banks will start to fail if TLT does fall further from here, but it will say the unrealized losses will become a larger problem for those regional banks when they're already facing a commercial real estate crisis. Let's just call it what it is, a crisis in commercial real estate markets. It's not going to help things, okay, with TLT falling. Not at all for the banking sector. So that's also something, I guess, to be on watch for. Now, the big event for this week is going to be on Wednesday. Now, on Tuesday, I don't want to leave this out. You do have the inflation rate coming out of Canada. That's expected to rise. Building permits, that data will be coming out. Really, it's not going to move our markets. The higher, the better there. The more building permits, the more buildings, the less housing inflation, presumably, we will see. Tuesday, it's really going to be about the Bank of Japan and potentially the bond market. That could be important, and that would likely affect markets. Now, on Wednesday, it's your holy grail of events for 2024 so far. Now, those other events, they're going to be important, but really it's the Fed. What does the Fed say? What does the Fed say about this recent spike in inflation? Now, I think a lot of people have forgotten what the Fed has said over the past 2 years or so. The Fed has made it very clear they would rather push the economy into a recession than have inflation really stick around for many, many years. The Fed has said very clearly they would rather be too high for too long than to not be high enough for long enough. Okay, so what does that mean? Inflation has started to ramp higher again. The last couple of months, as we were seeing a lot of progress on month-over-month inflation, well, it's started to reverse. And actually, if you look at inflation on a 3-month annualized basis, you're at 6.9%. That's bad. So if inflation just continued at this trend for the next 10 months, 9 months, you would be at 6.9% inflation. Now, I don't think that necessarily solidifies the Fed is going to raise rates, or that the Fed is going to say they're going to raise rates. I don't think that's going to happen. But I think the Fed, after the last couple of months of saying next move's a cut. You've seen that from many Fed officials. They think the peak is in for the Fed funds rate. I think they have to walk that back in a huge way now. I think the Fed has to come out and say, we're still expecting to cut rates next, but if the data continues to come in bad and inflation continues to come in hot, we will raise rates again. Here's where it's problematic. So if you look at what the markets are actually pricing in, just for no rate cuts in 2024, like the Fed just pauses the entire year, that's only a 1.2% chance. Insanely low. The markets are currently pricing in 3 rate cuts in 2024. So we went from pricing in 7 down to 3. Not a big deal. We go from pricing in 2 to 1. Who really cares? The markets have been rallying not based on 7 rate cuts, not based on 5 or 4 or 2 or the number. Okay, the number does not matter as much. It may start to matter, but so far it hasn't mattered for markets. Literally went from pricing in 7 rate cuts to 3. What happened to the markets? The markets continue to soar higher. Doesn't matter. The reason why the markets have been rallying, and I want to say this as clear as possible so everyone understands, the reason why markets have been going higher, again, not the number of rate cuts, but it's this logic that the Fed will not be raising rates again. The next move is a cut. If the Fed has to communicate to the markets that they may raise rates again, that maybe the neutral rate is higher than they thought, well, that's where you have a rug pulling on your hands. That would almost be like a gray swan event, maybe a black swan event, because nobody's expecting that. Nobody. And I think with the recent inflation data, the Fed has to put the optionality back on the table. Right now, the markets have been rallying because the optionality is off the table. The Fed has made it very clear they're not going to raise rates again. I think they have to make it clear that they will raise rates again if they need to, if the data continues to come in hot. There is a 0% chance that the Fed hikes rates again. 0%. No chance of that. I think Wednesday, you have to assign a 5 to 10% odds of that. And I think that's where you start to get some downside. Now, you will get a new summary of economic projections, and this is the dot plot. And I've showed you guys this many times. This upcoming week on Wednesday, we'll definitely be showing this again. But if we zoom in here, you're going to get the Fed members, the 12 of them, that plot their estimates for Fed funds rates, for GDP, for PCE, for unemployment. Now, the last report that we got was December 13th. We're going to get a new one on Wednesday. Before that was September. So back during the last summary of economic projections, the Fed lowered their GDP estimate from the September rating of 1.5% down to 1.4%. The unemployment rate stayed the same at 4.1% by the end of 2024. The PCE inflation estimates were revised lower from 2.5 to 2.4%. And the federal funds rate was revised from 5.1% down to 4.6%. So the Fed was previously forecasting 1 to 2 rate cuts in September of 2023 for 2024. Then they went to pricing in 2 to 3 rate cuts. I think they at bare minimum have to walk that back to 1 to 2, which would be around where their previous projection was, about 5 to 5.1%. I think that's probably going to happen. And I don't see much of a change to the other data here. Maybe PCE estimates go a little bit higher, maybe back to 2.5%. Maybe the unemployment rate goes up just a little bit, and GDP maybe goes up to like 1.6%. Not a big deal. It's really going to be the conference that is the big event on Wednesday, because again, Powell's going to have to hawk down and say, we will raise rates again if we need to. Because let's also be honest, I've showed you guys this many times. Goldman Sachs Global Financial Conditions Index is at the loosest, least restrictive point it's been at in a decade. That's because crypto's at all-time highs, stocks are at all-time highs, capital seems to be easy, credit spreads are tight. There's so many things that suggest maybe we're not too restrictive. And I think, yeah, the Fed has to put the optionality out there again that they will raise rates if they need to. And that's where you get into a big problem for our markets. So as I'm sure you guys already know, the Fed report comes out, the dot plot comes out at 2 p.m. Eastern Standard Time on Wednesday. You get the press conference at 2:30 p.m. on Wednesday, and the markets can move up or down based on the report, but you usually don't get the real move, the follow-through move, until Powell speaks at 2:30. Now, the day after, on Thursday, you're going to get S&P Global Composite PMI, Services PMI, some data that can be important, but I think by Thursday, the markets are going to be all focused on what Powell said. You will get Fed Barr that speaks at 11 o'clock in the morning. He usually talks bank policies a lot more than monetary policy, so shouldn't be a big deal there. And then you have Fed Bostic on Friday at 3 p.m., Fed Barr again at 11 a.m. So those are really your 3 major events for this week. If you want to group in their earnings, we do have some earnings that could matter. Specifically for Tesla, XPeng, Tuesday pre-market could be important. If they have good things to say about Chinese demand, that could obviously be positive for Tesla. You have General Mills and Ollie's Wednesday pre-market. I really want to see General Mills, what they have to say about food inflation. That could be important. One conference call that I will be reading at the bare minimum. And if they say anything that's kind of a leading indicator to food inflation, I'll bring that to you. Not expecting to hear that, but nonetheless, I will bring that to your attention. Wednesday and after hours, Micron, AI stock, kind of semiconductor name, chip name that could be important. Chewy, KB Home, Five Below, and Guess. It's really Thursday that I think is important. Darden Restaurants pre-market. Again, if they say anything about inflation or the state of the consumer, that could be important. But Nike, Lululemon, and FedEx, these guys can be bellwether type of companies for the economy and for the consumer. Specifically FedEx, that's one that you definitely should listen to, because if there's any company that kind of knows what the consumer is up to, consumer behaviors, that could be FedEx. That also goes for Walmart, for Dollar General, all those other companies as well. But FedEx could be specifically one that is important. But again, by Thursday, I think it's going to be all focused on the Fed. Now, specifically for the markets this week, I think, well, look, you had a breakdown in the NASDAQ on Friday. That's a pretty good sign you're going even lower from here. I think your next stop is that 50-day moving average around 427 on the NASDAQ. I think that happens before Powell on Wednesday, just because, hedging, maybe some anticipatory selling before Powell, just, reduce some risk, take some profits. And that would be about 1.5% down. Does that happen on Monday? The potential sell the news event with Nvidia? Possibly. Does that happen on Tuesday with the Bank of Japan raising rates? Possibly. I don't know, but my expectation is you're probably going to fall about 1.5% even before we do get to Powell. Now, I think you could ultimately fall about 10%, maybe 15% after Powell and over the next couple of weeks. I do think you're going into a full-blown correction here. At the bare minimum, a full-blown correction. Again, because the reason the markets have been rallying is really going to be thrown up into the air with some of Powell's comments on Wednesday, because, hey, the Fed may need to raise rates again. And they're not going to box themselves into a box or throw themselves into a corner because they've said, for months that they were going to be cutting rates next. I don't think the Fed can go out on a limb anymore and say definitively the next move is a cut. If next month CPI comes in hot, the month after that, I think they'll be raising rates again by, let's see, not March, not May, not June. Likely by July, they would be raising rates again if inflation does continue to ramp up until then. So for May and for June, for April as well, if those CPI reports are hot, they're going to be raising rates again by June or July. So definitely something to be considering. And that's why I believe a correction is coming in the markets. Now, for Tesla, I do think most of the fall is already over with. Could you fall lower from here? Obviously, but you got to look at this on a probability kind of standard. Is Tesla going to fall to 150? I think that probably happens, maybe even this week. 147 is technically the level to be watching. But are you going to fall lower than that? It's possible. Seems unlikely to me. A 24% drop from here would put Tesla stock at about 125. I would love to buy Tesla stock at 125. If you get down there, I think that's a very good moment to start buying substantial quantities of Tesla. But some people are calling for like $100 per share. I think that's where it gets a lot less likely, because you would have to fall just from here to get to $100 per share. You would have to fall about 38.5%. I don't see a 38.5% decline coming. If we do, then hopefully your hedges made a lot of money, because the markets are going to be in a rough spot at that point. Okay. And what we've seen on Friday, if you just get a sell-off in big tech, maybe that's a positive for Tesla. Maybe money goes back into Tesla. And you got to think about this as well on an expectations basis. It's always about expectations in the markets. Whether expectations are high or low. For Tesla, expectations are low. The stock has fallen because expectations are low, right? Because expectations are bad. You've probably priced in bad news or too much bad news for Tesla. Whereas the broader markets, expectations are high. Expectations are high from the Fed that they're not going to be cutting rates again. I think on an expectations basis, it's a bad scenario for the markets. And maybe you're already priced for that in Tesla stock with a 30+% decline you have seen year to date. At the bare minimum, you're better priced for that in Tesla than other stocks. So would it surprise me to see a sell-off in the markets and in Tesla? No. Would it also surprise me to see Tesla stock outperform if the markets do fall? No. So I think 150 is almost a guarantee. Maybe this week even. Maybe as low as 145. 125, there's probably a 45% chance we get there. Not quite a base case, but not a super, low probability either. $100 per share, I think that's like a 10% or less chance. Just because that would imply some huge downside in the markets, more than a correction. That would imply a full-on crash. So I think people want to be a little bit careful on their speculation for the downside. We also had that news that Tesla is raising prices for the Model Y basically everywhere besides China. That should be really good for preserving margins at the bare minimum, or adding to margins, helping margins get better. And I think that could have a positive effect on Tesla. In the beginning of the trading week, maybe you bounce to, 170 or so and then sell off to 150 by the end of the week. That wouldn't surprise me. Nonetheless, let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.